Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel @Accounting Buddy NB. In today's lesson, we will work through a complete set of practical illustration lesson covering sale of fixed assets with and without provision for depreciation, calculation of profit or loss on sale of fixed assets under different practical scenarios, WDV method of depreciation calculation and related entries for multiple years. The lesson will also include the comprehensive machinery ledger accounting, which includes the purchase, sale and depreciation entries. It will also include the profit and loss analysis on the sale of fixed assets. Therefore, sit back, relax and watch the full video till the end.
Illustration number 7 is on your screens. Tuli Trading LLC purchased a machinery for $200,000 on 1st of April 2022. The machinery is depreciated at the rate of 10% per annum. On 1st of July 2024, the machinery was sold for $120,000. Books are closed on 31st December every year. Show the machinery account when the provision for depreciation account is not maintained and when the provision for depreciation account is maintained. Machinery ledger account when the provision for depreciation account is not maintained is displayed on your screens for 3 financial years. On 1st of April 2022, $200,000 worth of machinery is purchased and is posted on the debit side of the machinery account by writing the words to bank account under the particulars column. On 31st December 2022, depreciation for $15,000 entry is posted on the credit side of the machinery account by writing the words by depreciation account under the particulars column. Depreciation for the financial year 2022 is provided for 9 months at the rate of 10% per annum, that is from 1st of April 2022 till 31st of December 2022. Now if we deduct from the total of $200,000 debit side balance, $15,000 credit side entry, we are left with a net asset value of $185,000 as on 31st December 2022 and is shown on the credit side of the asset account by writing the words by balance carried down. Thus the machinery account for the financial year 2022 is balanced. On 1st of January 2023, the closing balance of $185,000 as on 31st December 2022 will become the opening balance for the financial year 2023 and will be shown on the debit side of the machinery account by writing the words to balance brought down. On 31st December 2023, by writing the words by depreciation account under the particulars column on the credit side of the machinery account, $20,000 will be posted being the amount of depreciation charged at the rate of 10% per annum for the financial year 2023. Now if we deduct from the total of $185,000 debit side balance, $20,000 credit side entry, we are left with a net asset value of $165,000 as on 31st December 23 and it is shown on the credit side of the machinery account by writing the words by balance carried down. Thus the machinery account for the financial year 2023 is balanced. On 1st of January 2024, the closing balance of $165,000 as on 31st December 23 will become the opening balance for the financial year 2024 and will be shown on the debit side of the machinery account by writing the words to balance brought down. On 1st of July 2024, machinery is sold and the sales proceeds for $120,000 is posted on the credit side of the machinery account by writing the words by bank account under the particulars column. On the same day on which the machinery is sold, that is 1st of July 2024, depreciation for the period of 6 months, that is from 1st of January 2024, the first day of the financial year 2024, till 1st of July 2024, the date of sale is provided at the rate of 10% per annum and is posted on the credit side of the machinery account by writing the words by depreciation account for $10,000. Now when we deduct from the total of $165,000 debit side balance, $130,000 credit side entries, we are left with a balance of $35,000 which represents the loss incurred on sale of the machinery and is shown by writing the words by loss on sale of machinery account on 1st of July 2024. Thus, the machinery account for the financial year is balanced. Machinery ledger account, when the provision for depreciation is maintained, is displayed on your screens. On 1st of April 2022, a machinery worth $200,000 is purchased and posted on the debit side of the machinery account by writing the words to bank account under the particulars column. Since there is no entry in the machinery account in the financial year 2022, the original purchase value of the machinery will be recorded on 31st December 2022 on the credit side of the machinery account by writing the words buy balance carried down for $200,000. Similarly, on 1st of January 23, the original purchase value will be written on the debit side of the machinery account by writing the words to balance brought down for $200,000. And again, same value will be shown on the credit side of the machinery account on 31st December 23 as closing balance for the financial year 2023 by writing the words buy balance carried down for $200,000. On 1st of January 2024, the original purchase value will again be written on the debit side of the machinery account by writing the words to balance brought down for $200,000. On 1st of July 2024, machinery is sold and the sales proceeds for $120,000 is posted on the credit side of the machinery account by writing the words buy bank account under the particulars column. $45,000 being the accumulated depreciation from the date of purchase of the machinery till the date of its sale is transferred from the provision for depreciation account on 1st of July 2024, that is the date on which the machinery is sold. Now, when we deduct the total of $200,000 debit side balance, $165,000 credit side entries, we are left with a balance of $35,000, which represents the loss incurred on sale of the machinery, and it is represented by writing the words by loss on sale of fixed assets on 1st of July 2024. Provision for depreciation ledger account is displayed on your screens. On 31st December 2022, $15,000 will be posted on the credit side of the provision for depreciation account by writing the words by depreciation account under the particulars column. Depreciation for the financial year 2022 is provided for 9 months at the rate of 10% per annum. On 31st December 2022, $15,000 depreciation for the financial year 2022 will become the closing balance and will be written on the debit side of the account by writing the words to balance carried down. On 1st of January 2023, the closing balance as on 31st December 2022 becomes the opening balance and will be written on the credit side of the account by writing the words buy balance carried down for $15,000. On 31st December 2023, depreciation for the financial year for $20,000 is posted on the credit side of the account by writing the words by depreciation account. Depreciation of $20,000 at the rate of 10% on the cost of the machinery is provided for the full year. On 31st December 2023, the accumulated depreciation amount of $35,000, that is $15,000 for the financial year 2022 and $20,000 for the financial year 2023, will become the closing balance for the financial year 2023 and will be written on the debit side by writing the words to balance brought down. On 1st of January 2024, the closing balance of accumulated depreciation for $35,000 as on 31st December 23 will become the opening balance for the financial year 2024 and is written on the credit side of the account by writing the words buy balance carried down for $35,000. On 1st of July 2024, the depreciation for 6 months from 1st of January 2024 till the date of sale of the asset is posted on the credit side of the account by writing the words by depreciation account for $10,000. The amount of $45,000 of the credit side of the account is transferred to the machinery account on 1st of July 2024 by writing the words to machinery account. In this illustration, we will calculate profit or loss on sale of fixed asset under 4 different cases. Tolly Trading LLC purchased a second-hand machinery for $500,000 and spent $50,000 on its repair and another $50,000 for its installation. Depreciation is provided at the rate of 10% per annum by the straight line method. The said machine is sold for $440,000. The books are closed on 31st December every year. Calculate the profit or loss on sale of machine in each of the following cases. Case 1, if this date of purchase is 1st of January 2022 and the date of sale is 31st December 2023. Case number 2, if the date of purchase is 1st of January 2021 and the date of sale is 30th June 2023. Case 3, if the date of purchase is 1st April 2021 and the date of sale is 31st December 2023. And case 4, if the date of purchase is 1st April 21 and the date of sale is 30th June 2023. Let us first calculate the total cost of the machine for all the cases. The total cost of the machine will be $600,000, which is the sum total of the cost of machine, its repair cost and its installation cost. Annual depreciation of the machine at the rate of 10% per annum on the straight line method would be $60,000. Basis information as per previous slide, let us plot the basic information relevant for calculating the profit or loss on sale of machinery. That is the date of purchase, the date of sale and the number of years machine was used by the business before it is sold. This information related to case 1 and case 2 is shown on your screens. The date of purchase in both the cases is same, that is 1st of January 2021. In case 1, the machine is considered to be sold on 31st December 2023 and in case 2, the machine is considered to be sold on 30th June 2023. In case 1, the machine is used for 3 years while in case 2, the machine is used for 2 years and 6 months. In case 3 and case 4, the date of purchase of machine in both the cases is 1st of April 2021. In case 3, machine is considered to be sold on 31st December 2023, while in case 4, machine is considered to be sold on 30th June 2023. Therefore, in case 3, machine is used for 2 years and 9 months and in case 4, it is used for 2 years and 3 months. Total cost of machine in all the 4 cases is same, that is $600,000. Depreciation provided on machine in case 1 is $180,000. In case 1, since the machine is used for 3 years and annual depreciation is $60,000, therefore depreciation from the date of purchase, that is 1st of January 2021 till the date of the sale, that is 31st December 2023 will be $180,000. Now if we deduct the accumulated depreciation of $180,000 from the original total machine cost of $600,000, we will get the book value of $420,000 on the date of sale. In case 2, depreciation is provided for $150,000. Since the machine in case 2 is used for 2 years and 6 months, the depreciation amount of $150,000 is the sum total of 2 years of depreciation, that is $120,000, plus depreciation for 6 months, that is $30,000. In case 2, the book value of the machine on the date of sale is $450,000, which is calculated by deducting the accumulated depreciation of $150,000 from the total original cost of the machine of $600,000. In case 3, the depreciation is provided for $165,000. Since the machine in case 3 is used for 2 years and 9 months, the depreciation amount of $165,000 is the sum total of the depreciation for 2 full years, that is $120,000, plus the depreciation for 9 months, that is $45,000. Now if we deduct the accumulated depreciation of $165,000 from the original total machine cost of $600,000, we will get back the value of $435,000 of the machine on the date of sale. In case 4, depreciation is provided for $135,000. Since the machine in case 4 is used for 2 years and 3 months, the depreciation amount of $135,000 is the sum total of 2 full years of depreciation, that is $120,000, plus depreciation for 3 months, that is $15,000. In case 4, if we deduct the accumulated depreciation of $135,000 from the original total machine cost of $600,000, we will get the book value of $465,000 on the date of sale. Now let us calculate the profit or loss on the sale of machine in each of the 4 cases. The sale proceeds for all the 4 cases is $440,000. Now from the sale proceeds, if we reduce the book value of the machine under respective cases, we will get the profit or loss on sale of machine. In case 1, when from the sale proceeds of $440,000, book value of $420,000 is reduced, we will get a profit of $20,000 on the sale of machine. Now in case 2, where the book value of $450,000 on the date of sale is more than the sale proceeds of $440,000, we have incurred a loss of $10,000 on the sale of machine. In case 3, where the book value of $435,000 on the date of sale is less than the sale proceeds of $440,000, we have a profit of $5,000 on the sale of the machine. In case 4, where the book value of $465,000 is more than the sale proceeds of $440,000, we have a loss of $25,000 on the sale of the machine. Another illustration on your screen is following balances are in the books of Messrs. Tolley Trading LLC. Machinery account is having a balance of $800,000, while provision for depreciation account is having a balance of $320,000. The additional information available is on 1st of January 2023, a machine was sold for $200,000, which was purchased on 1st of January 2020 for $300,000. Accounts are closed as on 31st December every year, and the depreciation is charged at the rate of 10% per annum on the straight line method. Prepare machinery account and provision for depreciation account as on 31st December 2023. Let us first calculate the profit or loss on sale of machinery. The original cost of the machinery which is sold is $300,000. Now we will reduce the total depreciation provided for the machinery sold from the date of its purchase, that is 1st of January 2020, till the date it is sold, that is 31st December 2022. It means the machinery is used for 3 years. The annual depreciation at the rate of 10% per annum on straight line method for the machine costing $300,000 is $30,000 per annum. Therefore, depreciation for the machinery sold for 3 years will be $90,000. The book value of the machinery on the date of sales, that is 1st of January 2023, is $210,000. Sale proceeds of the machinery is $200,000. Since the book value of $210,000 on the date of sale is more than the sale proceeds, we have a loss of $10,000 on the sale of this machinery. The machinery ledger account is displayed on your screens. On 1st January 2023, the opening balance of $800,000 is recorded on the debit side of the account by writing the words "to balance brought down." Sales proceeds of $200,000 on 1st of January 2023 is posted on the credit side of the machinery account by writing the words "by bank account." $90,000 being the accumulated amount of depreciation on the machinery sold is also posted on the credit side of the machinery account on 1st of January 2023 by writing the words "by provision for depreciation account." $10,000 being the loss on sale of machinery as calculated in the previous slide is also credited to the machinery account on 1st of January 2023 by writing the words "by loss on sale of machinery account." Now when from the debit side total of $800,000 all the credit side transactions are deducted, we are left with the closing balance of $500,000. shown on the credit side of the account on 31st December 2023 by writing the words by balance carried down. The machinery account is said to be balanced. Ledger account provision for depreciation is displayed on your screens. On 1st of January 23, the opening balance of $320,000 is recorded on the credit side of the account by writing the words by balance brought down. On 1st of January 2023, $90,000 being the accumulated depreciation amount of the machinery sold is debited to the provision for depreciation account by writing the words to machinery account. On 31st December 2023, depreciation on the balance value of the machinery of $500,000 is provided at the rate of 10% per annum. The depreciation amount of $50,000 is provided and the provision is created by crediting the provision for depreciation account by writing the words by depreciation account. Now when from the total of $370,000 credit side total, the debit side transactions are deducted, we are left with a balance of $280,000 on the debit side of the account as on 31st December 2023 by writing the words by balance carried down. Thus, the provision for depreciation account is said to be balanced. Another illustration on your screen is Tolly Trading LLC purchased a machinery against the check for $90,000 on 1st of July 2022. Second machinery was purchased for $110,000 against the check on 1st of October 2022. Depreciation is charged at the rate of 10% per annum under the WDV method. Accounts are closed every year on 31st December. Past journal entries for the year ended December 2022, 2023 and 2024 and prepare the machinery account. Let us first calculate the depreciation of the two machines purchased. First machine is purchased on 1st of July 2022 and the second machine on 1st of October 2022. The cost of first machine is $90,000 and the cost of second machine is $110,000. Let us now calculate the depreciation for the financial year 2022. Depreciation for machine 1 is calculated for 6 months. Therefore, when we apply the depreciation rate of 10% per annum on the cost of machinery 1, which is $90,000, we will get an annual depreciation amount of $9,000 and the proportionate amount of depreciation for 6 months will be $4,500. For machinery 2, depreciation will be charged for 3 months. Therefore, the proportionate amount of depreciation for machinery 2 comes to $2,750. Therefore, the total depreciation of both the machines for the financial year 2022 comes to $7,250. The written down value as on 1st of January 2023, that is the first day of the financial year 2023, will be $85,500 for machinery 1 and the depreciation for machinery 1 for the financial year 2023 will be charged at the rate of 10% per annum on the WDV value of $85,500. Therefore, the depreciation for machinery 1 will be $8,550. Similarly, the WDV value of machinery 2 as on 1st of January 2023 will be $107,250 and the depreciation for machinery 2 at the rate of 10% per annum on WDV value of $107,250 will be $10,725. Hence, the total amount of depreciation charged for both the machines for the financial year 2023 comes to $19,275. Now the WDV of machinery 1 as on 1st of January 2024 will be $76,950 and the depreciation on machinery 1 at the rate of 10% on the WDV value of $76,950 comes to $7,695 for the financial year 2024. For machinery 2, the WDV as on 1st of January 2024 will be $96,525 and the depreciation on the machinery 2 for the financial year 2024 at the rate of 10% on the WDV value of $96,225 comes to $9,653. Therefore, the total depreciation for both the machines under WDV method for the financial year 2024 comes to $17,348. Basis previous slide information, let us now pass the journal entries in the books of Tolly Trading LLC. On 1st of July 2022, business purchased machinery for $90,000 and made the payment by check. The two accounts affected by this transaction are machinery account and bank account. Machinery account will be debited and the bank account will be credited, and the entry will be passed for $90,000 by writing the proper narration. Similarly, on 1st of October 2022, business purchased another machinery for $110,000 against a check payment. The entry will be passed by debiting the machinery account and crediting the bank account for $110,000 by writing the proper narration. On 31st December 2022, depreciation for the financial year 2022 entry is passed by debiting the depreciation account and crediting the machinery account for $7,250. The calculation of the depreciation for both the machines is explained on your screen. Proper narration of the entry is also mentioned. On 31st December 2022, depreciation for the financial year 2022 is transferred to the profit and loss account by passing the entry debit profit and loss account and credit depreciation account for $7,250 by writing the proper narration. Let us now understand how the entry of depreciation for the financial year 2023 will be calculated. WDV as on 1st January 2024 for the machinery 1 is $85,500, and when 10% is applied on the WDV value of $85,500, we will get $8,550 as depreciation to be charged for machinery 1 for the financial year 2023. The WDV of machinery 2 as on 1st January 2023 is $107,250, and at the rate of 10%, the depreciation amount for machinery 2 for the financial year 2023 comes to $10,725. Therefore, a total amount of $19,275 will be provided as depreciation for the financial year 2023. Entry will be passed on 31st December 2023 by debiting the depreciation account and crediting the machinery account for $19,275 and by writing the proper narration for the entry. On 31st December 2023, the depreciation amount of $19,275 for the financial year 2023 will be transferred to the profit and loss account by passing the entry by debiting the profit and loss account and crediting the depreciation account for $19,275 and by writing the proper narration for the entry. Let us understand how the entry of depreciation for the financial year 2024 will be calculated. WDV as on 1st of January 2024 for the machinery 1 is $76,950, and when 10% is applied on the WDV value of $76,950, we will get $7,695 as depreciation for the financial year 2024 for machinery 1. The WDV of machinery 2 as on 1st of January 2024 is $96,525, and at 10% depreciation amount for machinery 2 for the financial year 2024 comes to $9,653. Therefore, a total amount of $17,348 will be provided as depreciation for the financial year 2024. On 31st December 2024, the depreciation entry will be passed by debiting the depreciation account and crediting the machinery account for $17,348 by writing the proper narration. On 31st December 2024, the depreciation amount of $17,348 for the financial year 2024 will be transferred to the profit and loss account by passing the entry by debiting the profit and loss account and crediting the depreciation account for $17,348 and by writing the proper narration for the entry.
Machinery ledger account is displayed on your screens. On 1st of July 2022, machinery worth $90,000 is purchased, and again on 1st of October 2022, another machinery for $110,000 is purchased and the payment is made by checks. Both the transactions are posted on the debit side of the account by writing the words to bank account.
On 31st December 2022, $7,250 being the depreciation amount of both the machines is posted on the credit side of the account by writing the words by depreciation account. The calculations are displayed on your screens. Now if from the debit side total of $200,000 credit side transactions are deducted, we are left with a closing balance of $192,750 as on 31st December 2022 and is recorded on the credit side of the account by writing the words by balance carried down. Thus the machinery account for the financial year 2022 is said to be balanced. The closing book value as on 31st December 2022 for $192,750 will become the opening balance as on 1st January 2023 and will be recorded on the debit side of the account by writing the words to balance brought down. Depreciation for the financial year 2023 is posted on 31st December 2023 on the credit side of the account for $19,275. The depreciation calculation for both the machines is displayed on your screen. Now if from the debit side total of $192,750 credit side transactions are deducted, we are left with a closing WDV balance as on 31st December 2023 recorded on the credit side of the account by writing the words by balance carried down for $173,475. Thus the machinery account for the financial year 2023 is said to be balanced. The closing balance of $173,475 as on 31st December 2023 will become the opening balance as on 1st January 2024 and is recorded on the debit side of the account by writing the words to balance brought down. On 31st December 2024, depreciation for the financial year 2024 is posted on the credit side of the account for $17,348. The calculation of the depreciation for both the machines for the financial year 2024 is displayed on your screens. Depreciation is recorded by writing the words by depreciation account. Now when from the debit side total of $173,475 credit side transactions are deducted, we are left with a closing balance of $156,128 as on 31st December 2024 and it is recorded on the credit side of the account by writing the words by balance carried down. Thus the machinery account for the financial year 2024 is said to be balanced. Another illustration on your screen is a manufacturing business purchased an old machinery for $150,000 on 1st of January 2022 and incurred $50,000 on its repair. It charged depreciation at the rate of 20% per annum following the written down value method. The machinery was sold on 1st of July 2023 for $160,000. Books are closed every year on 31st December. Prepare the machinery account for the financial year 2022 and 2023. Let us first find out the total cost of the machinery. The cost of machinery of $200,000 is the sum total of the purchase price, that is $150,000, and the repair charges of $50,000. Now let us do the depreciation working. The machinery is purchased on 1st of January 2022. The total cost of machinery is $200,000. Depreciation for the financial year 2022 provided at the rate of 20% per annum on $200,000 will be $40,000. When we deduct the depreciation of $40,000 for the financial year 2022 from the original cost of the machinery of $200,000, we are left with a WDV balance of $160,000 as on 1st January 2023. Since the machinery is sold on 1st of July 2023, depreciation for the financial year 2023 will be provided for 6 months, that is, the first day of the financial year till the date on which the asset is sold. Therefore, the proportionate amount of depreciation of $16,000 will be charged for the financial year 2023. The WDV value on the date of sale, that is 1st of July 2023, will be $144,000.
Machinery ledger account is displayed on your screens. On 1st of January 2022, business purchased an old machinery for $150,000 and incurred $50,000 on its repair. Both payments are made by check. These transactions are posted on the debit side of the machinery account by writing the words to bank account. On 31st December 2022, the depreciation for the financial year 2022 is provided at the rate of 20% on the total cost of $200,000 of the machinery. Therefore, $40,000 is posted on the credit side of the machinery account by writing the words by depreciation account. Now, when from the debit side total of $200,000, the transactions on the credit side are deducted, we are left with a closing WDV balance of $160,000, which is recorded on the credit side of the machinery account as on 31st December 2022 by writing the words by balance carried down. Thus, the machinery account for the financial year 2022 is said to be balanced. The closing balance of $160,000 as on 31st December 2022 will become the opening balance as on 1st January 2023 and will be recorded on the debit side of the account by writing the words to balance brought down. On 1st of July 2023, machinery is sold for $160,000 and is posted on the credit side of the machinery account by writing the words by bank account. On 1st of July 2023, depreciation from 1st of January 2023 till the date of sale of machinery is provided. Machinery depreciation at the rate of 20% on $160,000 comes to $32,000 and the proportionate amount of depreciation for 6 months is $16,000. Now from the sales proceed of $160,000, the WDV value of $144,000 as on the date of sale of machine is deducted. We have $16,000 as the profit on sale of machinery, which will be recorded on the debit side of the asset as on 1st July 2023 by writing the words to profit on sale of machinery account. Thus the machinery account is said to be balanced. Another illustration is displayed on your screens. On 1st of January 2021, Tolly Trading purchased a machinery for $1.2 million. On 1st of July 2023, one of the machinery purchased on 1st of January 2021 for $80,000 was sold for $45,000 and a new machinery for $158,000 was purchased and installed on the same date. Depreciation is charged at the rate of 10% per annum on the diminishing balance method. Show the machinery account if the provision for depreciation is not maintained. Books are closed on 31st December every year. Let us first calculate the profit or loss on sale of the machinery. 1st January 2021 is the date on which the machinery sold was purchased. The cost of the machinery sold is $80,000. Depreciation at the rate of 10% per annum on this machinery costed $80,000 for the financial year 2021 is $8,000. Therefore, the WDV or the book value of the machinery as on 1st January 2022 will be $72,000, that is $80,000 less $8,000. Depreciation for the financial year 2022 will be charged at the rate of 10% per annum on the WDV value of $72,000 of this machinery. Therefore, depreciation of $7,200 will be provided. The WDV as on 1st January 2023 will become $64,800, that is $72,000 less $7,200. Since this machinery is sold on 1st of July 2023, proportionate amount of depreciation for 6 months for the financial year 2023 will be provided. Depreciation at the rate of 10% on the WDV value of $64,800 comes to $6,480 and the proportionate amount for 6 months comes to $3,240. The book value of the machinery as on 1st July 2023, that is the date on which the machinery is sold, will be $61,560. The sales proceeds of this machine is $45,000. Since the sales proceeds of
$45,000 is less than the WDV value of $61,560, business has incurred a loss of $16,560 on the sale of this machinery. Let us prepare the ledger account of machinery when the provision for depreciation account is not maintained. Machinery account of the business is displayed on your screens. On 1st of January 2021, business purchased a machinery for $1,200,000 and it is recorded on the debit side of the machinery account by writing the words to bank account. On 31st December 2021, depreciation for $120,000 for the financial year 2021 is provided and is posted on the credit side of the machinery account by writing the words by depreciation account. Depreciation amount of $120,000 is calculated by applying 10% per annum rate on the cost of the machinery. Now when we from the debit side total of $1,200,000 we deduct the credit side transactions, we are left with a WDV balance in the machinery account for $1,080,000 and it is recorded on 31st December 2021 on the credit side of the machinery account by writing the words by balance carried down. Thus the machinery account for the financial year 2021 is said to be balanced. On 1st January 2022, the closing WDV balance of $1,080,000 as on 31st December 2021 becomes the opening WDV balance and is recorded on the debit side of the machinery account by writing the words to balance brought down. On 31st December 2022, depreciation for the financial year 2022 for $108,000 is posted on the credit side of the machinery account by writing the words by depreciation account. Depreciation amount of $108,000 is calculated by applying 10% per annum rate on the WDV value of $1,080,000 of the machinery. Now when we from the debit side total of $1,080,000 we deduct the credit side transaction, we are left with the WDV balance in the machinery account for $972,000 and it is recorded on 31st December 2022 on the credit side of the machinery account by writing the words by balance carried down. Therefore, the machinery account for the financial year 2022 is balanced. The closing WDV balance as on 31st December 2022 of $972,000 will become the opening balance as on 1st January 2023 and will be recorded on the debit side of the machinery account by writing the words to balance brought down. On 1st of July 2023, the sales proceeds of the machinery sold for $45,000 is posted on the credit side of the machinery account by writing the words by bank account. The depreciation on the machinery sold for the financial year 2023 is proportionately charged at the rate of 10% per annum on the WDV of $64,800 as on 1st January 2023 for 6 months amounting to $3,240. It is posted on the credit side of the machinery account on 1st of July 2023 by writing the words by depreciation on machinery sold. On 1st of July 2023, the loss on sale of machinery is posted. Since the WDV of $61,560 is less than the sales proceed of $45,000, a loss of $16,560 on the sale of machinery is posted on the credit side of the machinery account. On 1st of July 2023, a new machinery for $158,000 is purchased and is posted on the debit side of the machinery account by writing the words to bank account. On 31st December 2023, depreciation for the financial year 2023 is posted on the credit side of the machinery account by writing the words by depreciation account. The depreciation of the existing machinery after reducing the WDV of $64,800 of the machinery sold, it is charged on the balance WDV of $907,200 at the rate of 10% per annum, which amounts to $90,720. Depreciation on the new machinery for $158,000 purchased on 1st July 2023. The proportionate amount of depreciation for 6 months at the rate of 10% will be provided, which amounts to $7,900. Therefore, the total of $98,620 depreciation is posted on the credit side of the machinery account. Now, if we deduct from the debit side total of $1,130,000 all the credit side transactions, we are left with the closing WDV balance of 966,580 as on 31st December 2023 by writing the words by balance carried down. Therefore, the machinery account is said to be balanced.
In my next lesson on 7th of March, we will explore one of the most crucial concepts in accounting, provisions and reserves, which ensures that the financial statements reflect true, fair and realistic business performance. We begin by breaking down the meaning and importance of provisions. Through practical illustrations like provision for doubtful debts and provision for taxation, we understand how these adjustments protect the integrity of financial statements. We will also cover objectives of creating provisions and will conclude this lesson with a focus on the key features of provisions and high skill questions and answer series.
If you enjoy the content of my channel and appreciate my teaching style, please subscribe, share and like my YouTube channel @Accounting Buddy NB. Thank you and goodbye for now.